following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this, thank you Walter, on this last day of the month, the last candle that is of the month, of the trading month. Here I am thinking, I can't believe that I kept thinking Monday was the end of the month, and that Tuesday would be the first, when I've got a webinar on the 4th, which is Tuesday. I looked at one calendar and I think I mixed up one month with the other. And in the back of my mind, I'm looking at one thing and thinking another. Hey, this is the month that we're going to look at that candle right there on the right in the monthly chart. Let's go. Dow's down 22 at 25,316. S&P is up 3.90 at 2741. QQQ 168.36 up 21 cents. IWM down 5 cents at 151.78. Gold is down 3.5 at 12.26. Silver must be down as well, surely. Silver is down 0.16 at 14.24. Ooh, lousy candle. Dollar, our dollar, my dollar, as Tom would say, King Dollar, long from 90, we're at 97.18. This monthly chart is really important because it's making a close above the previous high, which was back in July or August of 96.98. 30 cents, we're close, but not, you have to wait until 4 o'clock. Anything can happen. Any news event, anything can happen. But if there is a close above that high, at peak A in the monthly chart, that's saying that the dollar is strengthening. And now we're going to see what happens over the weekend. Mark in the Den made a comment. He said, I believe there is already a trade deal with China. Navarro would not be in the room with Trump and Xi if there wasn't a high likelihood of a deal, in my humble opinion. Xi, I can't, how do you pronounce it? I haven't heard it. Actually, I can't remember if Xi. It's called Xi. Wait, I played tennis with someone with an X. Xi. All right. He wants to strengthen his currency, and Trump wants a weaker dollar. Really? I'm not sure. Maybe he wants a weaker dollar, but they really haven't done anything about it yet. China wants to move on yuan, oil trade, trying to legitimize it. Hence, they need stronger yuan. This is all conjecture on my part. Yes, I will get into that because there are a couple of signs that we're looking at, and I want to go to that as well. A lot's going on. Crude oil. So the dollar is very strong. No, let's go to the EUR-USD. This is the dollar. This is the dollar euro currency, and that is trading down at 1.132. Doesn't look too good. Weekly chart doesn't look too good. Monthly chart is making a doji, long-legged doji candle. Other ones have failed. So is this a halfway market to the downside, or is this a reversal? Well, we might know by Tuesday or Wednesday. If the dollar really saw, I'm going to go through that. We'll go through that carefully in a while. USD JPY. USD JPY is in fact 113.53. It's up a little bit here. It's just in this rectangle sideways formation. TLT talking about sideways formations. The TLT right now, I'm just trying to bend this a little bit here. There it is. The TLT, which is the iShares 20-year Treasury Bond Fund, is at 115.06. I really think I'd say closing in the 115.25s or higher would suggest to me that if the market actually was pulling back, as that happened, we would see a migration from the shakiness of equities, of stocks, and going to something like the fixed income. Right now, I just think that this is in the sideways action. We'll talk about it as we move along today, because today's Technical Friday. I want to get into the technicals of all the things that I'm looking at. I've got this webinar coming up Tuesday night. I said that we're going to look at what's so important. We're going to look at what succeeded. Let me just do this right now. So I've had a webinar based on the Chapman wave methodology of leg D, how powerful a leg D can be. So for my subscribers, we were looking at a leg D in, let me go through them one at a time, CTXS, which is Citrix Systems, Security Apps, etc. And that was way down there in the 105s, 105, 106. We got in and we took a little 1 point loss twice. And then the darn thing did exactly what we wanted, which was to make that left side, right side price time match, go to a leg D. And lo and behold, yesterday went to D at 112. So that's one. Here's another one. TMO was a stock that has been on my list, not for years, not just for decades, because it's such a good company. And somehow or other, it gets away from me to the upside, and then I forget about it. Next thing I look at is screaming to the upside. Well, once again, I said this is going to go. This was 3 days ago. I said TMO looks like it wants to go to a leg D. It made a peak F 249.95 top on the 3rd of October, pulled back sharply to the 217 area. That is 32 points. I mean, that's 12%-ish or something like that. What does it do? It makes a U-shaped turn, and it runs to the upside, goes to leg D yesterday. And this is one we were just following because I said it's gotten away. It's a little late, but we want to see how, if it can close above the left side high of 249.95, it'll go on my list for Tuesday. I'm making a list of fantastic stocks that are just, every bull market, they've been wonderful successes. Thermo Fisher Scientific Inc. is a medical equipment company. It's in that area. I think I have to call this a leg B in the weekly chart so far. I have to consider this really could be a leg B, and that's really bullish. But hey, let's see how it does early next week. Monthly chart is a leg D. What was the other? Oh, and then one that I put in yesterday as a buy, and then we missed it because I had Thermo Fisher in my list, my bullet point list in my daily newsletter, the last page that goes out, which is the Traders Corner. And for some reason, I put everything about waste management, but I put it in right next to what I'd already set up the night before as Thermo Fisher. So TMO was the symbol. I gave all the ingredients for waste management. It did exactly what I wanted it to do. Thermo Fisher had already gone to a leg D. I was about to go to a leg D. I said, no, we're going to hold off on that. We're going to go to waste management, another leg D that we were looking at. And I said to buy it yesterday. It closed at 92.80 something. I said to buy it at 92.20. Yesterday's low was 92.12. We would have got it perfectly. It ran all the way this morning up to what? 94.08. So yes, we missed that only because of some dumbness on my part. Now it's a leg D. We've got all these Ds in waste management. I mean, it's always in a bull market. In whenever the market's in a bull market, this thing is alive and awake and doing the right things. I'll be back. Dow's down 17, S&P's up 4. Basil Chapman, Tiger Technicians out.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back, and I just wanted to show these charts. Look at these charts right here. You see this pattern, peak D, comes back down, it goes to trough B, and then hits this 200-period moving average, the blue line, bounces sharply, and then reverses. So this is the H pattern we're looking at. Here's the H pattern here with the peak F in this longer-term chart. Turns out this is a 5-minute and this is a 10-minute. Could you tell that it wasn't daily charts or monthly? No, those are the patterns that we look at all the time. So on Tuesday night, I'm going to just briefly, I'm not going to go too much into the Chapman wave methodology. There won't be enough time. I'm looking at the stocks. I'm looking at parameters. I will talk about that because that will be repeated in my newsletter for those subscribers that are coming to my webinar on Tuesday night, 5 o'clock till 6:30. It'll be archived. You'll be able to see it. A lot of people don't have time. They look at it in the archives. This one is not specific. Most of them are time centered, so that it's really important that that's kind of the day that you want to take it, because we're starting to put in trades. This one is a build. There's going to be certain trades that we start putting on. We're already trying to attempt to get into some that have the potential to move higher. But that's the way it's going to work, and I'll explain things as we go along. Every day I'll show the charts. I'll show each one that we've got. If we're long or short, I discuss it, what we're looking at in terms of the Chapman wave methodology. So let me just show you here. Right there. Okay. So we were on waste management. Look, but the Chapman wave, you see this channel, this little mini channel within the larger channel. This is what I call the Chapman wave inside track repellent zone. So what happens? It went to this waste management, into this area. It just nicked the dashed green line, because if it closes above that, that's now on the outside of the resistance, the repellent zone, and that's kind of important. But if it holds there and starts to pull back, it makes this inside track repellent area very strong resistance to take out. If it pulls all the way back, I'll draw the same thing at the bottom. I'll have an inside channel, little mini channel in the bigger uptrend channel, and that'll be the support level. And look at the monthly chart. The MACD is not too good. It's okay, but not good. Stochastic's very strong at 89%. So we've got conflicting technicals. That's what I'm going to be talking about. Why? I've got a selection of maybe 20, maybe there'll be more stocks that we want to just have a quick look at to show you, to introduce you to what we're looking at for the next phase of this mega bull market. We haven't finished. I don't believe we finished the consolidation yet. We have in some stocks, but in a lot of stocks, there's going to be a lot more time needed. So whatever happens this weekend, so let's just put it, let's go issue by issue. Monthly charts. So I said, I'll look at that. Look, the Dow monthly chart right now, November is about to close. If it closes by the end of the day, if it closes, we're just above the 9-period exponential moving average. And that line is at, click, 24,539. We're at 25,321. So we are a fraction under it. Fraction under it says, yeah, you can't really put a down arrow just yet. Stochastic is still at 81%. If it was at 79%, you could. The MACD has turned down, but only slightly. So I might need even more time before I'm able to confirm. I'm pretty sure this is a peak F. I don't know for sure, but I'm pretty sure that it's going to turn out to be a peak F and not a B. It doesn't matter. Right now, what we're looking at is how does it close for the month? How do I assess it over the weekend? Over the weekend, my subscribers know you'll certainly be getting charts from me Saturday, late Saturday and Sunday. So look at this. These two blocks, blue blocks, these rectangles, show that the arch formation in the weekly chart, which did take out the left side low back in April, took out the January low, has gotten close twice to the 24,122 low that was made right here. I think it was October 29th. But it hasn't taken it out. So far, this is positive. It allows room to go to the upside. I had a question. Let me just finish this. First one said, greetings. Hope all is well with you and your family. Sure appreciate all your help, which has made 2018 a profitable year for us. Smiley face. Likely a foolish question. But you keep mentioning that Monday's candle is critical with the monthly close. But why isn't that today? Today's candle, given that tomorrow is this is so stupid, December the 1st. No need to respond. You can briefly touch on your show at the top of the hour if you want. Again, thanks for all that you do, Walter. Hey, Walter, thank you. Thank you very much. Yes, today is the last trading day of the month. I was in two worlds. It was just a really busy week. I had a whole bunch of confusing things going on, time schedules that were off. Everything was just crazy. So I'm back, I'm looking at it, and I'm saying, yes, today is the last day of the month. So these two rectangles are really important. Why? It allows room for one more pop-up and then a digestive phase. But the question will be, is it possible that we actually start a major move from here? And the answer is, of course, that can always happen. I'm just looking at the technicals and saying, more likely there'll be a pretty decent bounce, and then we'll come back and form a trading band. And if there is no bounce, if there's something that happens over the weekend so that Monday is an ugly candle, that would say to me, we're starting off December with a really good chance that we're going to close the month of December below the 24,318 9-period moving average, maybe even below 24,538, the 14-period moving average, which we haven't done in the Dow since way back in, what was that candle? February of 2016. So I'd say that there's a chance that we're going to consolidate a little longer. S&P, let me give you parameters as well. S&P, SPX.X. Now this one is a little different. This is underneath the 2,741 9-period moving average in the monthly. We're trading at 2741. Give me a break. What did I just do? That's the green line. Yeah, sorry, 2752. I misread that. 2752 is 10 points, 11 points below it. The way this candle looks, it looks to me like with the MACD negative and the stochastic at 81%, I might also have to hold off and say there's every evidence that we've got a sell signal, but I can't do it based on the Chapman wave methodology yet. Sell mode daily, sell mode weekly, nothing yet in the monthly. The QQQs. 171 is the 9-period monthly moving average, 9-period moving average. We're under that. We're above the 14-period at 168.28. Give you parameters right away. The weekly and daily are in sell modes. The monthly is in a sell. Stochastics at 83%. The MACD is just turned down. Price has been terrible. It was way worse before we had that big, massive move up on Wednesday. Now I'm looking at it and I'm saying, well, technically, it looks like it does every characteristic of a PF at 187.53. You're going to have to wait. You're going to have to wait the entire month of December before you can put a down arrow. But the parameters to watch, a close in December below, I'm going to say below the 9 EMA of 166. No, I'm going to make it below 159 would confirm for me that the NASDAQ, the NDX 100, is going to have to take a lot more time to right itself and start a big move to the upside. That's that. And IWM, as we're about to go to our next break, IWM at 151.68 is in a sell mode in the daily, weekly, and monthly. Sorry, a sell signal in the monthly. So I hope that's kind of giving some parameters to look at. A move up into at 151, a move into the 157s kind of saves the day if it's December. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I'm keeping this chart up here because in 2 weeks from today, I'm doing an all-day webinar, part 1 and part 2. Part 1 goes through all these different patterns. We start practicing and learning them. And in the afternoon, part 2 from, so it's Eastern time, 9 o'clock till 12 is part 1. Part 2 is going to be 1 o'clock until 4, but 4 to 4:30 we do a wrap-up for what we would expect for Monday, to prepare for Monday. So what I'm looking at, look at this chart. See this H pattern, the lowercase h? This is what's forming right now. Can it stop? Well, there's your uptrend line. I'm going to teach about trend lines. I'm going to teach about channel lines. I'm going to teach about those inside track repellent and propellant lines. the arch formation. What happens? I'm going to teach about which moving averages I love to use, which give me so much information. I'm going to talk about how I use the MACD. Look at the way the MACD follows the green line. Look at the way it kind of follows the line of the price that you are monitoring. And look, I always do this for the rectangles, just for educational purposes. I always do that to show that that is a deflection. Didn't inflect back up. It deflected back down, and look what happened to the price as it did that. But it isn't as low as it was. So this is the key, because there's your trend line. There's a 2-minute chart of the E-mini. Anyway, I'll keep doing these throughout the day to show how we're going to work 2 weeks from today. And some people like to trade during this particular period because this is learning the techniques and then putting them into practice. This is one of the few times I'm saying, yeah, maybe if you want to actually trade at the same time, maybe earn the keep, whatever it is, this could be a time to do it, because we're going to be looking at stops, buy stops, what to do, etc. Now let's go back to our charts. So the IWM monthly chart right now, if nothing happens, it could rally in, it's at 151, it could rally 2 points or so, wouldn't make any difference. This is in a sell signal in the monthly chart. Not yet a sell mode. Technically, I could give it that sell mode upgrade, but maybe I'm going to just be very patient. It's a monthly chart. I really have to wait for each monthly close. It's frustrating sometimes, but sometimes it's the best thing you do. I've seen some Junes where 2 days before the end of the month, everything looked like it was just going to be horrible. And then out of the blue, you get a spectacular, I don't know why it's June. It's happened often in June. It's happened in other months, but June is the one that sticks in my mind, sometimes August, where you get a spectacular last 2 days and wham, the next thing you know, what was a sell becomes almost like a buy signal. So I'm waiting. Now, here we go. I said it's going to be technical. I'll take your questions. I'll try to incorporate them. So the question here is, you always say that news, don't listen to the news, follow the chart patterns. But there are inflection points. And this is right here. You can tell I'm looking at it, talking to you about it. Today is an inflection point because we got the end of the month, but we're in the middle of the range. Look, even the IWM, if you look at the low that was made at around about 144, and the high that was made around about 157, we're at 151. That's right in the middle. It's an inflection point. So the question was, I'm going to read it. Because I only get one of these out of, dozens and dozens of people. There's always the one, and I don't mind because I like to always be put on the spot. It makes me a better trader. At least I try to be a better trader from it. So it's not a criticism, it's critique. I hope it's critique. So this is what was said. After all your very hard effort you put in on the 120 minutes, the daily, the weekly, the monthly, all you can tell subscribers is that you have to wait until Monday's open to make any trades today. What happened to the thousands of times you said news can't change the overall trend? Pretty sad. I'm not going to mention the name. It's pretty sad. I don't know what. Actually, I don't even know what he's talking about. I had a trade today. I have 2 trades. We had one that got the exact low yesterday. I think that was pretty damn good on a day in this kind of whippiness. I got one that got the exact low, but we didn't get it because I made an error. It was just a dumb error, but we would have had it perfectly. And that went from 92.20 to today's high of 94.08. You tell me, is that a bad trade or is that a good trade? It's a no trade, but everything about it was correct in the analysis, etc. Nothing to be ashamed of, right? And the next thing is, I did have a trade for today. It was the same trade as yesterday if there was a pullback, because that's what I wanted. All I said was, on Monday, I will know whether we're going to be having to follow gap ups or gap downs, because that's the way this weekend could result. It could be so fuzzy by that Sunday night that the market has already gone up. The futures in Sunday night have already gone up 15 or 20 points, down 15 and 20 points, and Monday we come in and we're +3 on the E-minis, S&P, or minus. You don't know because of inflection points. And all I'm saying is, I've looked at this. These are the patterns that I'm following. Let me explain. I mean, I don't know how many thousand times I've done this. I've explained that the lowercase h can go to a lowercase m. We're in the process now, in the middle of that second arch formation. I think that's pretty damn good analysis. If it breaks and closes above 26,350 any day next week, that starts to extend the right side of the arch formation, and there it is in those rectangles. If it breaks down and for some reason we're under 25,000, the 200-period exponential moving average, it means that probably the analysis that it's choppy sideways action for a little while, with each index now showing a little bit of a different bias. That's the way it is. That's my explanation. There was nothing changed today, and my major trend analysis hasn't changed, but the positions will change a little bit. Why? Because I didn't want to be too heavily on the long side right today with new positions, because the risk reward means that if you're wrong, you might not even be able to get out decently if this is the big sell-off on Sunday night. And on the long side, it's the same. On the short side, I don't want to be wrong on the short side with a whole Sunday night and early Monday morning. There's plenty of time. I said there's no rush in this particular phase. That's why the Tuesday night webinar is going to be so important. We're going to be looking at Keystone. Look at Amazon. Who wouldn't want at least a little piece of Amazon if this is going to go from the thousands to the 2000s over the next year and a half, 2 years? Well, the high was 2050. The low was 1420, round number low. That was a very good clue that there'd be a bounce. That was on the 20th of November. It's trading now at 1682, 260 points higher. Very nice. However, the daily chart is saying it's just breaking now resistance. It's in the second arch formation. It's under the previous arch formation, that B minus, that doji candle of the 8th of November. The weekly chart says it could rally, but it just needs quite a bit more work. And this is the best month for Amazon in terms of earnings, surely. I mean, this is the season, right? So I'm looking at this and I'm saying that monthly chart says Amazon needs more time. And that's what I'm saying. You've got time, and even if there's a gap up, there should be some kind of a pullback. We get in for volatility. If you don't think that with all the things on the table right now, there won't be volatility, I don't know. VMware, a spectacular stock, gets earnings yesterday. It's up 12 to 14 points overnight. Now it's up $2.62. CRM, another great company. CRM right here. This is Salesforce.com. Gaps up huge, but it's still way under the 181 all-time high. There's time.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, so I got an email from Fred. Remember, Fred gave us some real nice parameters looking at the oil, crude oil way back when it was on its rallying. Now he says, I noticed this chart on soybeans. I got a really good risk-reward entry here. The technicals are improving on the daily, and we are at a peak B. The weekly technicals look strong as well. So here it is. You see the weekly. This is a very important criteria for me always. This is very nice in the daily soy, up 7 at 894 and a quarter. And what I am looking at here is that the technicals are improving. They're not great. It's in the rectangle formation, but it needs to break and close decisively above the high of the 2nd of November, 878. It needs to get to 879. It actually needs to get to 880, right in the 880s. It's at 894.5 right now. But what's really important is that in the notation, we had this single leg A to the upside, became an A minus, and then we've had from that low that was started on the 31st at 844.5, that is the up arrow, because the MACD and the stochastic did rally strong, the price rallied strongly, and it's held. Normally I wouldn't put the up arrow, but it was so big and getting so close to the previous high that I had to put that in because everything was working. If the technicals were lagging, that's one thing. But then it pulled back and it went then to a gray peak, A peak, B peak, C, all under this peak A high of the 2nd of 878 and 3/4. So that is an ABC, even though the next low was lower. This is your key low right there, the one that I said was right at the end of October, beginning of November. So if there is a high above 897 and a quarter, 897 and a quarter, that starts your D. But at the same time, if the technicals are starting to improve, you can say it's a D after a couple of restarts, and that's really positive because it's saying if it holds, then immediately the left side high of 905 and 3/4, the high of the 15th of October, kicks in. Just make sure that you got support. It could bounce around here for a little while, but 880 to 876, I'd say if it goes under that, be a little careful. And the reason why I say that is if you look at the weekly, look, the MACD is strong, the stochastic is strong, but the price hasn't made a new high. You need the confirmation. You need parallel. I'll be discussing this in great detail in my all-day webinar 2 weeks from today, December the 14th. That's a Friday. And that's you can prepare for that. If you're interested, please just ask me questions. I'll tell you exactly what it's going to be about. It's on the front page of TFNN. But this needs to have confirmation of price. I like to see price with technicals in commensurate with one another, moving strongly up or down to give you the next leg up. That's really what I want. This one says, hey, wait a minute, there could be a rectangle formation, and that corresponds to what you're looking at over there. That could just be a rectangle formation. And as you know, rectangle formations can last a lot longer than your patience. Next question was, Hyundai bragged at the Los Angeles Auto Show that its new three-row, this is unbelievable, three-row Palisade SUV has 16 cup holders. You know, I remember this distinctly. Back in 2000, I said, I think I'm getting a major top here because I think it was the Cadillac Escalade, the wagon. It really was a truck. All it was is a really horrible truck, cladded up like a Cadillac could do, but basically it was a basic Chev truck that was cladded. And what did they advertise? They advertised something like 10 or 12 cup holders. I said, just like I've been following automobiles and tops of the market way back. I remember talking about this back in '69. I remember saying, hey, the automobiles in '69, the front grille and the back grille weigh as much as the car. This is excessivity. I didn't use the word excessivity. I just said excessiveness to its greatest extent. This has to be some kind of a market top. So yeah, so this is really important. What we're looking at right now is we're getting to this phase where all the accoutrements are going to be important. So thank you, GT, for that information. This is part of what I'm talking about for the next big coda phase. Auxiliary, accessories, things that are really actually unimportant to the core become very important. And there's got to be some kind of another equivalent of a jazz age, talking about that Tuesday night. So Boeing, yep, let's do Boeing right now. BA right now is down 360. I have to tell you, Boeing, I think there are really big problems in Boeing that have not been announced. I got a feeling that Boeing is going to have a tough quarter coming up. We'll see. All-time high was up at the 390s. Went to the 290s, now trading in the 339s. I don't think it's a good sign. Next question is, Bob, XLI. Let's have a look at the XLI because that does have some of the cyclicals that are very important right now. Because if China comes across, look, let's face it, if we start to see build out once again in the whole farm area, Caterpillar, Deere, if these things, the cyclicals that are directly geared towards the commodity and commoditization of global enterprises. What I mean by that is building. That's going to be very important. But when I look at Home Depot right now is trading up 252. It's working very hard. I like the fact that it's up. I like the fact that it made a doji leg D to the downside and then a trough D and the 165, 167 round number. I didn't see that. I looked at this the other day, forgot to check the price. Round number low. That's really important. So I'm keeping my eye on Home Depot. It's really important all around, not just for the building materials. It's important for homes. It's important just all the way around. The monthly is a sell signal. Not yet a sell mode, but a sell signal. And the daily and weekly on sell signals. The daily, though, might be able to bounce from 178 to the 187 area if this market gets any strength next week. And if it closes at 190 in December, I have to consider that maybe the 167 low was the low for Home Depot in this particular phase, and that it might not have to retest that. But if it starts to go anywhere close to 172 in the next 2 weeks, that's a problem. Next question is, Sarah, okay, Goldman Sachs. Now, I consider Goldman Sachs, I forgot to put it on my list. I'm still putting in the names. I think Goldman Sachs is really important. It's important. I don't think it's a has-been. I think it's always been from 1929. Why would it suddenly fail in its major mission of being the company that leads in the financials? It just doesn't make sense unless they are being hit by something we don't know about. It could be a scandal. Maybe it's a scandal. I don't know, but it's actually acting scandalously at a new low, a new almost a multi-year low at 188. This is a sign to tell me that the XLF right here, XLF trading down, no, it's unchanged, 2682. It's just stuck in the lower part of the range. This is going to be we'll talk about that on Tuesday night. What about the financials? What about the KRE? What about the regionals? Is there now a difference? No, so far there's no real difference between the regionals and the XLS. On GS, you must read up on the one MBD scanner. Okay. I've seen that written about. I haven't actually read about it. I'll check it out because maybe that's the big thing. Maybe I'll have to put it off my list for now. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. Basil Chapman. We are going to go straight to Mike. Mike in Ormond Beach. Hi, Mike. How are you?
Basil, I'm doing great. Basil, the other day I sold Western Digital short around $48. And today we came down and we made a bottom, we made a low at 43.41. And I'm looking at it on a weekly chart, and I'm looking at it on a daily chart. And on the daily chart, the stochastics have just rolled over and they look like they're heading down. However, we're in an area where we have made bottoms in the past. If you look back days earlier, we made a bottom at 42.60, and then before that we made a bottom at 43.46. So I don't know, what's your opinion? Do you think we've made a short-term bottom today? It looks like we may be forming a hammer candle.
So let me just do that. I don't want to run out of time. So, Mike, I'm going to say to you, first of all, congratulations. You really nailed this in terms of its actual turn from the arch formation, number one. Number two is I'm doing a real quick left side, right side price time match on Western Digital in the weekly chart. As you mentioned, the weekly chart's been coming down very sharply. There's a left side, right side to the low that was made on the 11th of week of the 11th of August, and that comes in exactly to the 9th of November, but that low that was made on the 2nd has had very little of a bounce, and the MACD's very weak still, stochastic's very weak in the weekly, and the 9-period moving average at 49.41 was touched, and now it's been a repellent zone. So I'm going to say we have no idea how we're going to open on Monday. So there is that risk, but if there wasn't this whole thing going on Monday, I would just say to you, I'd stay on the short side. I'd probably say if you're really nervous, then take off 1/3 or half of your position. 4 points to gap up on Monday, that would be a lot of points, and I'm not sure that that's going to happen. I like your position. It's how you handled it going into the close today and over the weekend. But I'm just saying to you, I don't think it's going to gap up 4 points on Monday. I think you've got the right position. Western Digital looks to me like it's going to go to the 39, to the 38, 37 area. Hope that helps, sir. Thank you for calling.
Thank you.
Folks, have a great weekend. Stay tuned for Steve and Tom, and you've got Dave. I'll be back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.